Hello everyone. So wanted to start by giving you an update on the dividend stock that I was talking about yesterday. So if we go to Quadravest, Canadian Bank Corp. So I called the company this morning, left them a voicemail, sent them an email. They responded by email. And so even though they say that they'll pay Class A shares, they'll pay holders of Class A shares on the termination date of December 1st, 2018, the $15 original issue price of those shares. So it's not guaranteed. So I got the email. So here, let me show you the email. So I pinned it as a comment, but basically they explain that you get whatever the net asset value is at the date of termination. Preferred shareholders will get $10 and Class A shareholders will get the difference. So right now it's trading at 22.80. The net asset value is 22.81. So that would mean that Class A shareholders would get 22.81 minus 10, so 12.81, which is almost exactly what the stock is trading at right now. And then when I asked why do they mention $15, why do they mention $15 on their website, and then the response was it's an objective but not a guarantee. So as you can see here, it's under objective, but it's not a guarantee that they would pay $15 at termination date. Although when you look at the other products they have, let's say Financial 15 Split Corp, which also pays dividends and also has an expiration date or a termination date, they explain that Class A shareholders get the difference between the net asset value. So they explain over here that Class A shareholders will get net asset value minus $10 that is paid to the preferred shareholder. Net asset value here being 17 right now. So that means this stock is trading at 10. So if we buy it at 10 and they end up terminating it, we'd be getting $7. So this is a risky stock to buy right now because it's overvalued in case they terminate it by December 1st, 2020. In most cases, they keep renewing. This stock has been going on for a very long time now, and they just keep renewing every 5 years. But still, I find it risky to buy something knowing that at any time they end it, you're gonna be getting less, even though the dividends might make up for it. So Bank Corp right now is priced exactly at the price that you would buy it at. So it's not a great deal as I thought it would be, but it still pays 11%, and it's very consistent in paying the dividends since 2008. But in terms of getting a guaranteed 17% in case they terminated by December, that's not happening. So just wanted to update you guys with this information. So if we look at my portfolio, RSP, got American Airlines slightly up today. So I'm up 6%, 6.5% on American Airlines. Got Alibaba. Now what the hell's going on with Alibaba? Just because the executive chairman, Jack Ma, is retiring in a year, the stock goes down almost 6 or 7%. And it's not like anything changed because the current CEO is still in charge and was in charge for a while. So nothing really changes in the company. Nothing changes in the operations of the company. And Jack Ma, the executive chairman, is still going to be around for a whole year and maybe even after a year. So seriously, the way the media expresses the news, portrays the news, it's ridiculous because it's not even bad news. It's not even a big deal, and the stock just dropped 6%. Unless there's something else in the background that made the stock drop. But that's the only news. That's the only highlight right now going on with Alibaba. Regardless, I still own some Alibaba at 164. Might buy some more if it drops maybe below 150. Try to keep a 10% gap between every purchase. See, I've got some Dividend 15 Split Corp, which is the same company that does the Bank Corp, what's it called? The Canadian Bank Corp. So I got this one because it pays, right now it's paying 17% dividends per year. If it reaches close to 5, I'm definitely going to buy some more because let's look at the net asset value for this one. So I bought at 6.69, but it's a little bit high because the net asset value I think is about 15. So yeah, net asset value is 14.83. So if they terminated by December 1st, 2019, so next year in about 14 months, and its net asset value is still 14.83, preferred shareholders will get $10 and I will get the difference. So I'd be getting 4.83, but I paid 6.69. So I bought this mutual fund. I only put in $500 because, first of all, because of the high dividend potential, and because I know that they just keep renewing their products all the time. So most likely they're not going to terminate December 1st, 2019. They're just going to keep renewing, and at the same time I'll be collecting high dividends. So here in the objective they say to pay the holders of Class A shares at least the original issue price of those shares. But that's just the objective. It's not what's going to happen. It's not guaranteed. But like I said, looking back at all their products, they just keep renewing their products, and while you're a shareholder, you're collecting dividends. Although some of their products, if net asset value drops below a certain amount, they suspend dividends, but it usually doesn't last long. So I've got Ford today, went up a bit, down 6% on the shares, down 46% on the options. L Brands is slowly going up. So it had reached 26 or even 25 last week. So now I'm only down 11%. Vodafone is going up slowly also. I bought it at 22.87. Closed today at 21.65, so I'm only down 5%. And I think there's a dividend coming in November for Vodafone, so that's good. Another stock in a competitor of Vodafone would be Orange. It's also I think it's an interesting stock to look into. It's already it already went up a bit compared to the last time I saw it. So it pays a dividend of 6% per year. 1 year estimated target price is $21. Market cap 41 billion. Obviously it's in the same industry as Vodafone. So 1 year chart, you could see 15 is the lowest. Look at 5 years. The lowest it's been in 5 years is 12, and that was back in 2013. But it's always been trading around from 15 to 18. It's been trading. And if you look at reports, you've got a strong buy from stock reports. CFRA gives it a buy recommendation with a 12-month target price of 21. Morningstar gives it a fair value of 18.94, almost 19. So lots of reports are positive. So good dividend, good analyst reports. 52-week low, big player in the telecom internationally. Revenue growing slightly. Net income not so great, not as consistent, but still profitable. Made $2 billion profit last year. So things are looking good. So this is definitely a stock personally I would buy if liquidity was available. And I've got WestJet that went up a little bit today, and I'm up 3% on WestJet. Look on the TFSA side, looks like I'm out of money on my TFSA. I guess that's like a Questrade glitch. Okay. Alright, so I've got my Ford shares that I'm down 14% on. Ford options I'm down 20%. Facebook that I bought at 168 last week, closed today at 164, so I'm down 2%. Would definitely buy some more Facebook, although it doesn't pay dividends, but capital gain potential is there. I'd buy some more probably at around 152 if money was available. And I've got AT&T that I bought at 32, closed at 32.39. This one's been steady, isn't really moving. I'm up 1% on that one. Just want to show you the dividends that I've received in Questrade. So I don't hold many dividend stocks in Questrade, so let me just show you what I've received. Under Questrade, you go to reports, account activity, deselect everything else and just leave dividends highlighted. And here you can see I got some $19 US dollars of dividends from L Brands, 468 from Walmart, 13 from Ford, 643 from Starbucks, 270 from American Airlines. So this is extra money or extra gain from holding the stocks, and it accumulates. These are small amounts because I don't put that much in one stock. So I put between 800 and 2,000 max. So L Brands, I think I have like 1,300 in L Brands. I've got Walmart, I had less than 1,000. Starbucks, I had 1,000 that I just sold. American Airlines, I have 1,000. Tesla went up 8% today, which is really crazy, although it shouldn't have. Although it dropped hard on Friday just because of the video of Elon Musk smoking weed with Joe Rogan, which really was not a big deal. Once again, media portraying news in a certain way that makes people overreact. I mean, just because he smoked weed does not change the operations of Tesla or whether or not Tesla sells a good product. Regardless, today, and also because an accountant, one of the accountants quit on Friday because there was a disagreement on Tesla going private. So that probably made the stock drop on Friday, and now today it's up 8%. Who knows why? Maybe it's just recovering from Friday's useless drop. Very disappointing because I wanted to get in at 250. I think it reached like 252 on Friday. Anyways, I didn't have money available, but definitely would like to get in on Tesla at 250. Hopefully it drops back. 1 year estimated target is 322, but Tesla's a little bit shaky, but I still think it's not going anywhere, and it's going to recover and it's going to go back above 300. But personally, I would try to get in at 250. I'd feel more comfortable at that price, and it doesn't pay any dividends. So on the investor's edge side, still got my Bank of Nova Scotia. I could probably buy some more if it drops below 74. Enbridge, I'm not buying any more of Enbridge. I've got too much in it, but it's trading at well, let's look at intraday. So yeah, it closed at 44.43. This is a stock that I'd probably sell at 51, 52, but I could even hold long term because it pays really high dividends, almost 7% right now, and it's not a stock that's going anywhere. In fact, I see a lot of articles that mention Enbridge is the one stock to buy and forget about it and just keep it long term for the dividends and potential growth. So confident in Enbridge, but disappointed that I bought it a little bit too high. So on the Canadian side, I've got Cenovus Energy that I bought way too high. I bought at 15 over a year now. And it closed today at 11.84. So got some more Enbridge, got HBC, got General Electric that I bought at 17. These are just some stocks that I have to forget about. Kraft Heinz that I bought at 75. New York Mortgage Trust is a good one. I bought it around 6 average price. Closed today at 6.42, but this is a stock that I'm just keeping for the dividends long term, forever, because it pays around 13% dividends per year. So some stocks that I'm looking at that I would love to buy is GM right now. I think this is a new 52-week low, pays 4% dividends. Might be a little bit higher. I thought it was 5%. And 1 year target is 46, and many reports give it above 44 target price and a strong buy recommendation. It's on Warren Buffett's it's in Warren Buffett's portfolio. So lots of factors make me confident in buying some GM. So Tesla, Facebook, Alibaba, maybe some dividend 15 split corp too. If it reaches 5 or gets near 5, I'd buy some more. Power Financial Corporation. I get really pissed every time I see Costco, because this is a stock I bought at 150, sold at between 165 and 168, and it dropped back down to 152. I didn't have time to buy some more, and now look at it all the way up to 243. So, and I bought this maybe like 8 months ago, but I sold like in 2 months. But if I had kept it longer, I would have made a much better capital gain. So sometimes I wonder, is it best to hold it long term and just ignore the short term fluctuations? So I think I have to do a video about this, what is best, selling short term or keeping stocks long term and just ignoring the short term fluctuations. But I have some other stocks where I'm really happy I sold, because if I didn't sell, I would have missed out on confirmed profits. Sometimes it's best to confirm your profits and just accept that you don't always know whether the stock is going to continue to go up or if it's going to come back down. And actually, when I sold Costco, it dropped afterwards. So I was happy that I sold, but I was just too slow in not buying back more Costco shares. Regardless, that'll be a topic for another video. So if you have any questions, leave them in the comments below. You can also email me on my website. I'll provide the link below. If you're going to open an account with Questrade, use my referral code in the description below the video, so you can get between $25 and $250 depending on your initial deposit. Thanks for watching.